The efficiency of unfettered markets, as is argued by economic theory, is true only for an ideal model of perfect competition market. That is only when a certain market complies with a long series of non-realistic conditions. I just mentioned three of them that are particularly important. First of all the decision makers in the market, included firms and banks, are considered in the jargon of economists as price takers, that is, cannot manipulate prices and all other important variables of a market. And this implies, however, that they should be firms, banks, and decision makers of very small dimension, completely devoid of economic and political power. But we know that big firms and big banks, on the contrary, have a great economic and political power. They are able to manipulate the market. In particular, they are able to manipulate the prices. There is the recent example of the manipulation of the Euribor interest tax. That is a very important reference tax for fixing the price of many financial assets. And we know that big banks manipulated them in order to increase their profits. The second condition that is also very much unrealistic is that economic agents are considered as fully rational, in the sense that they have all the relevant knowledge about the important development in the markets, and they entertain expectations that are rational, that is, their predictions are always correct as far as systematic factors are concerned. But we know that most decision makers in the market, and even the best economists, were unable to predict the recent crisis. So even this assumption is not realistic at all. And third, it is assumed that the markets are always in equilibrium, in the sense that all the markets clear, that is, demand and supply are equal in all the markets, and this assures the full employment of all resources, including labor. So this implies a full employment, and implies also financial stability, that is, absence of financial bubbles. But we know that the employment, unfortunately, is not full, that we have a lot of financial bubbles, and that we are very far from equilibrium since many years. Now, as far as the financial system is concerned, the systematic liberalization that started in the late 70s, after a long period of strict control and supervision of the behavior of banks and financial markets, changed the behavior of the financial market, because in the preceding periods, this control and supervision avoided episodes of financial instability. When these controls were released in the 70s, started a period in which financial bubble increased more and more, and financial crisis became more and more deep and more broad as far as the geographic area is concerned. So, in order to stabilize again the financial system, we should try to do what it was done after the great crisis of the 30s. So we should try to control again the financial system. This is very difficult because we all know that when the Pandora vase is open and all the winds go away, it's very difficult to capture them and include them again in the vase. However, in principle, policymakers should definitely study radical reform of the financial system in order to avoid new devastating financial crises. This intervention could be classified in 3 levels. The first level is the level of the reforms that just tend to stabilize the system as it is and do not aim to change the scope of the financial system or its targets. So the law of reform approved in 2010 in the United States, that is the Dodd-Frank Act, was the only significant attempt after the crisis of regulating again the financial system. But everyone agrees today that this law, although very complex, didn't succeed to obtain the targets of stabilizing the system. There is a second level of reforms that intend to shift back much of the power of the economic power from the financial system to the real system of the economy. In order to increase the growth of the real economy and obtain again full employment in the real economy. However, proposals of this kind have been only discussed, but no one tried really seriously to adopt them. One example is the adoption of a financial transaction tax. Even in Europe there was a proposal of this kind, but the activation of this law was progressively watered down and postponed in time. But even this second level wouldn't be enough, because it is true that we should obtain a greater support from the financial system to the real economy, but we should also obtain that the support to the required investment goes in the direction of sustainable development in order to solve the grave problems of climate change and the problem more in general of maintaining the equilibria of the biosphere. I think that without this sort of reforms, the risk of a new devastating crisis remains hanging around.